Let me say at the start, I fully expect to lose this debate because I've done these debates before. And what I've found is the Bitcoin people at the beginning vote that they're in favor of gold just so they can switch to Bitcoin at the end so that Bitcoin could win. So I'm prepared for that. But anyway, and the other thing about these gold versus Bitcoin type debates is that in reality, Bitcoin and gold have absolutely nothing in common. I mean, Bitcoin, part of the marketing fraud is to try to portray Bitcoin as gold 2.0, digital gold. I mean, Bitcoin itself is always displayed as a coin and the color is gold and you put like a B on it. But it's not a coin, it's just a digital string of numbers. It doesn't have any substance, it doesn't have any color. And what made gold money was the properties that gold, the element, possesses as a metal, as a commodity. Bitcoin doesn't possess any of the metallic properties that gives gold value. Now, what Bitcoin tried to mimic was some of the other qualities that made gold a better form of money than other commodities that could be and have been used as money. You see, by definition, money is simply the most marketable commodity. And yes, Anthony mentioned that we used to have barter, and money was an invention that made trade more efficient because barter is inherently very inefficient. And so the invention of money was a major progress as far as human history is concerned. And a lot of things were money before gold ultimately emerged as the best money because it satisfied the qualities of money best. And some of the qualities that gold had, divisibility, portability, fungibility, these are some of the properties that Bitcoin copied. But without the fundamental value of gold, a metal, Bitcoin can never be money because money has to be a store of value. And a lot of people in the crypto community try to claim that Bitcoin is a store of value because if you bought it 10, 11 years ago, the price has gone up. Well, there's a difference between a price and value. The reason that gold is a store of value is because you're storing the value of the metal gold. Gold can be used to do all sorts of things. Sure, you could use it for jewelry. I got a gold watch on that's made of jewelry, and a lot of the gold is used in jewelry, but gold is used in industry, it's used in aerospace, medicine, dentistry. There's all sorts of demands for gold, the metal, because it is the most useful metal on the periodic table. And even if I'm not going to use the gold myself for any of those uses, even if I'm just going to store gold coins or gold bars, in my safe, what I am doing is storing the future use of gold because gold does not lose any of its properties over time. That's what makes it such a good store of value because in 100 years, in 1,000 years, the gold that I'm storing today can be melted down and used in electronics or used in jewelry or for whatever new uses have been invented that don't even exist today. In contrast, Bitcoin can't be a store of value because it has no actual value to store. There's nothing I can do with my Bitcoin today. There's nothing anybody else can do with it tomorrow. Sure, you can give it to somebody else. You could trade Bitcoin. But why does somebody want your Bitcoin? Because they think they can give it to somebody else who thinks they can give it to somebody else at a higher price. This is a greater fool. What Bitcoin, in effect, is kind of like a combination Ponzi scheme, pyramid, chain letter. The only value comes from the belief that the Bitcoin can be sold in the future to a greater fool who is equally convinced he can sell it in the future at a higher price. This isn't digital gold. This is fool's gold. This is modern day alchemy. Bitcoin doesn't have a future. To me, it's not gold 2.0. This is tulip mania 2.0, except tulips had more intrinsic value than Bitcoin because at the end of the day, at least you had a flower.
Thank you.
6 minutes?
Actually, you were 5.5, so I'll give you your 30 seconds back. I owe you one, right? Right. Okay. So now we're going to start getting in some audience questions. Please do submit yours. You do it on the Q&A button. I'm going to spend a few minutes basically just nagging the panelists to see if I can get a bit more value out of them, get them to test some of their own convictions, because I always feel when people come in as convinced as these two are, there must be a soft edge to their argument, a cliff edge that we could perhaps probe. But the main thing I'd really like you to do, audience, and I've got a lot of subscribers on this call, please do send in your questions. I'm far better at this if you send me questions, otherwise I'll just rabbit on. And I think it would be much nicer to have some questions. We've got a few in already, so let's get them in. And of course you can tweet as well, hashtag IQ2Crypto. Okay, so I'm going to start with you, Anthony. When you say this is, in a sense, a bit of a breakthrough moment, one thing I would like to know from you is, what is the problem to which cryptocurrency is the answer? We'll come on to whether it's a bubble in a minute and whether you owe each other a tulip or not. But is there something that is really going on here, or is it just kind of a nice idea because we've got the technology, so we might as well?
Well, listen, there's a lot going on. I mean, I just 30 seconds of addressing Peter. I think it's important. If you accept that we've moved into a digital society, and if you accept that we're adopting things on the internet, and so therefore there's value on the internet. Example, Facebook.com, that URL has value. Amazon.com has value. And so then the question is, does the Bitcoin network itself have value? And I believe it does. It's at 125 million users right now. I think it's going to 1 billion users. I think Kathy Wood is going to be correct. 1 billion users by the end of 2025. And so we would go to Professor Robert Metcalfe at MIT and we would say, Dr. Metcalfe, does a network in itself have value? And I think the answer to that is yes. To answer your question specifically, we have a tendency to corrupt our money. We've been doing that forever. This is the 50th anniversary since the abrogation of the Bretton Woods Treaty by Richard Nixon on August 15th, 1971. Yeah. And to Peter, I'll make a point on Peter's behalf. We were measuring these currencies in gold 50 years ago, $35 an ounce for gold in 1971. It's roughly $1,700 or so dollars an ounce today. We've corrupted our money. There's some best-selling books behind Peter about the Great Crash and the overall corruption of money. And I've read those books that Peter has written. I would encourage everybody to read them because he's explaining that when you start to corrupt the money, every single person on this call tonight has been gypped some way or taxed some way by a central banker as a result of that money proliferation. And so what the Bitcoin is solving for is we can make this widespread. We can have a network of billions of users. And because of the scarcity of Bitcoin, there are 21 million coins out there, several million of which have left to be mined, but 2 or 3 million that were likely lost and as a result of early adoption, poor storage. And there are 49 million global millionaires, according to JP Morgan. We don't even have enough Bitcoin for each global millionaire to own 1 Bitcoin. And if you believe that that network has value, Peter is suggesting that it doesn't because all it is a cryptograph on the internet. But I would suggest that that network itself is very, very valuable. It's a trusted network. And the breakthrough for me is it's a libertarian concept. I have this code. I can transfer it to you as a representation of a ledger of the money in my pocket. That's a ledger. This piece of fabric is really not worth anything, but somebody believes that it is. And we have to solve that because this is being printed now in a massively corruptive way around this. It's like 31% increase in M2 since April of 2020.
That is a good point worth remembering on the supply side. But let me put the broader point there across to Peter, which, as I understood it, is that the network itself has value, that you can argue about what is going to happen to the currencies, and we might talk about that in a minute, what the risks are inherently, but that the network in itself is growing, has value, and has believers. Peter, isn't that in itself something that you should consider?
Well, first of all, the point that we're addressing here about the problem, I agree. Yes, paper money, fiat money is a huge problem, and intrinsically it has no value. The value of that piece of paper that Anthony is holding on to comes predominantly from faith. When we had real money, you didn't have to have faith because you had gold. You had a real commodity, and everybody knew its value because everybody knew what you can do with gold. But fiat currency, people just believe it has value, but it also gets value from the fact that governments declare it as legal tender, and governments require the payment of taxes in that currency. And so there is a natural demand. Nobody wants to go to jail, so everybody needs dollars in order to pay their taxes. And so that's where the value comes from. The problem with Bitcoin, and one of the many problems, is its value comes from the same thing. It's confidence. You have to believe that it has value. You have to believe that other people are going to want it. Maybe you have to believe in this network. But at the end of the day, its value is derived from confidence and belief, except you don't even have the government behind it to force you to pay taxes in it. So I think it's much easier for that faith and that confidence to be lost. Bitcoin was the first cryptocurrency. There's now over 11,000 other ones that exist. I mean, who's to say that Bitcoin won't be passé, that some of these other coins will become more popular and people will forget about Bitcoin? I mean, generally, the first mover is not always the last mover. Somebody invents or builds a bigger mousetrap.
But would that not be a challenge to you, Peter? Because that would simply show that someone or group behind it were better at it than Bitcoin. It wouldn't disprove the argument, would it? It would simply say, well, these virtual currencies are working.
Well, no, because I think the fact that you can always come up with another one destroys the argument that there's scarcity there. I mean, you're not going to come up with a better gold. Gold is gold. But I can keep inventing these cryptocurrencies. There's no limit to the supply of cryptocurrencies. And I don't know that necessarily if you can assign a value to the network, if that value inures to the individual, Satoshis that everybody owns. And, I know that, yeah, we're going digital. A lot of things now are digital, but that doesn't mean that everything is digital. I don't live in a digital house. I don't eat digital food. I don't drive a digital car, and I'm not going to have digital money because money is a commodity. It is a real thing. It cannot just be replicated digitally. If you want to have a store of value, if you want real money, then you need something like gold. If you believe in fiat money, well, then you can have fiat cryptocurrencies. But the problem is, again, you're playing a confidence game only without the government supports and all the other infrastructure, the price structures, the insurance products, the bond markets, all the things that people use fiat currencies for today. They don't use Bitcoin for any of that other than just trading. People collect Bitcoin.
Let me kick that back to Anthony, just so that when we get to the half hour, we can go to the audience, because I've got some very good questions. Thank you very much, audience, and do keep them coming, and I'll try and group them as sensibly as I can. Anthony, I'm actually speaking to you from the Baltic states, so I've been speaking to and talking to people who are obviously very keen on digital. It's interesting the point, we don't have a digital car. Well, we don't, although I feel I've got near as damn it a digital car. I got a car from Bolt, one of the big car apps up here. I did it all on the app. I turned up, open sesame, the key was there, literally the car was physical, but nothing else was. Even so, I say to you, talking to Kaja Kallas, the very go-ahead Prime Minister of Estonia, on digital yesterday, cryptocurrency, she said, I don't yet see that it would inspire confidence. And if you are getting to the point where your argument is quite well advanced, it exists in the real world, and yet governments are still very chary, very leery of it, there might be a problem around that. Am I right?
I had that view that you're sharing with me, that the Prime Minister of Estonia, or the President of Estonia, had. If you were talking to me in 2017 or 2018, I would have had this higher level of skepticism. When I left the White House, people forget that I was also at the XM Bank, and I spent several weeks at the XM Bank examining the XM Bank as its chief strategy officer, making a recommendation to the administration whether or not we should keep the XM Bank. And at that time, they were talking about the digitization of the dollar and the threat of a digital yuan. And when I was fired from the White House and went back to my business, it's one of the great things about being an entrepreneur. After you're fired, you go back to your own business, big deal. I bought the URL skybridgebitcoin.com because it became very clear that the fiat currencies were going to start digitizing. So what I would say to the Estonian government is, I understand your concern, but there's been exponential growth in the network. The network has moved from 30 million users at that time to 125 million users, on its way to 180 by year end. And so as more and more users join the network, the fait accompli of the network will be such that it'll be impossible not to have it as a part of our lives. And what I would say to Peter about gold, I respect gold and I understand gold's cultural and historical tenets, but software is eating the world. Every book behind me right now, I can digest that book into this smartphone. And then I have room for my photos and everything else. And I think what Mr. Nakamoto or Mrs. Nakamoto, the group known as Nakamoto, suggested is, if we've got money, and this is where Peter and I would intellectually disagree, gold is just another representation of value. It is a ledger. The human beings for 5,500 years are trying to come up with a ledger between each other so that they can exchange goods and services without bartering. Gold is just another representation of that. So all Nakamoto is saying is, this meets the three tenets. It's scarce, it can be networked, and I can transfer it to you in an impregnable way. We don't have to like or trust each other, but I can create that one-on-one experience without having to go through a third party. One last quick point.
Yeah, quick one back to Peter and then to the audience, because we've got some great questions. You'll have to keep going for those.
If we capture a meteor, very valuable one, that's got $2 quadrillion worth of gold, it's going to super disrupt that market. Bitcoin can't be disrupted. It can't be recreated.
Peter,
Well,
very quick last comeback there. You can volley or serve at the net, and then we'll go to the audience.
Well, first of all, gold is not a representation of anything. Gold is itself. It is a metal, right? It is a commodity. And prior to it being money, it was bartered for other commodities. I mean, I could have some gold and you could have some wheat, and we could exchange one commodity for another, one value for another. So when gold became money, gold became accepted in exchange for any other commodity, but it was a commodity itself. Bitcoin does not possess that property. Bitcoin is not an actual good. So, when you talk about digital books or digital music, these things can be digitized. This is intangible. I can read a book on paper because what I'm reading are the words. And so you can transfer those words to me digitally or on a piece of paper. The same thing with music. I can listen to an album that's playing on, a phonograph, or I could listen to, an iPod or whatever. It's the music which is digital. But other commodities like gold is a physical element. It is a metal, and it can't be replaced with a digital representation, because I can't make this watch out of digital gold. I can't conduct electricity with digital gold. You have to understand the difference. When you are putting your faith in Bitcoin, there's nothing real. The price can implode at any minute. You are dependent on more and more people deciding to adopt it. Why? Because they're confident that they're going to get rich. And all they have to do is hold on to it and never sell it, and it will go up, and one day they're going to be rich. Well, eventually the supply of fools runs out and the bottom drops out of the market.
Right. Okay. I got loads of questions, so I'm going to encourage you to give your answers in a pithy and haiku-like way so that you're good value for anybody's money, however it is. How about this one? LCS, mysteriously from New York City. Hi, you. How do we know if cryptos are not an elaborate scheme by the original whales cash out at once with other whale collaboration? We had a couple of questions along those lines with a suggestion that it was kind of a bit of a rigged. Can you rig a bubble? I don't know, but if you can rig a bubble, that was the kind of suggestion. I suppose that goes to you, Anthony, in a response from Peter.
The very quick answer is an analysis of the wallets that are out there. It's very easy to find those wallets. That was probably true about Bitcoin in 2011, 12, and 13. There's a way more diverse portfolio of people in that network today. And I would recommend a book quickly, Dominic Frisby's book, Bitcoin, The Future of Money. You can buy that on Amazon for $15. He explains to you why that misnomer about the whales and 200 or 300 people owning Bitcoin is a misnomer. And I probably can't do it justice. And
But basically, you don't believe the sort of
well, I don't believe
conspiracy
it,
about
but I can
whales.
also prove it empirically in terms of the way
Okay.
the where the
All
wallet.
right.
Yeah, but
Okay. Well, here's a challenge.
can I respond to that?
Oh, I'm so sorry, Peter. Come
Yeah.
back and then I'll throw you something off
Yeah,
the bat.
well, a couple of things. One, you have no idea who owns those wallets, so the same people can own multiple wallets, so you don't really know. But my thinking on the whales is I don't think most of the whales got in at the very beginning for pennies of Bitcoin. But I do think they were attracted to it and loaded up on big positions somewhere, between 100 and 1,000. I think a lot of the big money got in, and I think they did coordinate a highly targeted marketing campaign in order to pump up the market price of the Bitcoin that they had acquired. And so I think they have been selling into the hype. And so in my mind, it is a giant pump and dump where the guys that got in relatively early, maybe not on the ground floor, but relatively early, are constantly trying to pump up the market in order to generate a lot of enthusiasm and a momentum and FOMO so that they can sell out gradually into this market that they are creating. And I think it's part of the whole culture of this hodl diamond hands trying to convince as many of the little guys to never sell. Because if you're the big guy and you're trying to unload your Bitcoin, you don't want everybody else selling at the same time and screwing it up for you. So you want to convince all the new people who are coming in that they can buy Bitcoin now at 30, 40,000, 50,000 a Bitcoin, and it's going to go to 1 million, it's going to go to 10 million. You got to get those guys on board and make sure they never sell so you can keep getting rid of yours. And that's what I think is going on behind the scenes.
Right, come on then. I want to go into some other things. Question from Sarah. What do you think about digital currencies like a digital dollar? Could this displace Bitcoin and gold? And obviously we know the Bank of England is also having a tentative, but it has actually put it into public domain. So not that tentative look at possibly looking at digital currency as well. So is there a sort of, can you have a halfway house on this, which is sort of addresses some of the concerns and convictions on both sides of the argument? Quick one on this, please, if you could. Anthony, then Peter.
You have to repeat it in because there was a little garble. I apologize. It was a technological.
Digital currency.
I can answer it.
Yes, actually, Peter will go first.
Yeah.
Then you hear Peter. You'll know.
And I think Anthony would agree with my answer. Look, I don't think a digital dollar is a threat to Bitcoin or gold. I mean, all a digital dollar is the same fiat currency we have now, tokenized. I mean, most of our transactions in dollars are already digital. I mean, I use my credit card or debit card. I mean, I rarely pay for anything in cash anyway. But the problem with a digital dollar, where the threat lies, is to our freedoms and to our privacy. Because at least if I'm spending paper dollars, I can buy something without the government knowing exactly what I bought and tracking everything I do. But the minute we get rid of the physical paper and everything is forced onto a digital network, the government knows every single thing I buy and when I bought it. And who knows how that information, maybe it seems innocent now, but how it may one day be used against me. And also, I think it will make it even easier for the Federal Reserve to pursue reckless monetary policy, negative interest rates, somehow having an expiration date, or all kinds of crazy things to create even more inflation. So I think a digital dollar would even create more of a need to get rid of the dollar and look for a viable alternative. I just don't think Bitcoin would qualify. I think gold would.